barometer tracks 10 African countries: South Africa, Namibia, Mozambique, Tanzania, Nigeria, Kenya, Ghana, Uganda, Zambia and Angola. One of the most critical tools for cross-border activity is relevant market intelligence about the markets businesses are venturing into, and this barometer looks to give detail around each country's operating environment. Relative to last year's barometer, some countries' trade attractiveness has increased while others lost some ground.
One of the countries we did see a big change on to the negative, unfortunately, was Ghana. It went from ranking of 3 to ranking of 7. And a lot of that was driven by some of the economic challenges that Ghana has experienced: high inflation rates, high interest rates. They've had significant debt challenges to deal with. And that's extended to other things like access to US dollar liquidity. I mean, in the barometer, SMEs are telling us that one of their biggest challenges in terms of government support in Ghana has been lack of access to US dollars. So they were unable to pay for imports, which really stagnates the economy.
Mozambique has increased in the rankings on the back of an improved policy environment.
On the positive side, of course, very encouraging to see the likes of Mozambique improving its ranking, also through really good policy measures being put in place, good economic stability, and particularly focus on localization and supporting SMEs in their economy. And that's starting to come through the barometer quite strongly.
Tanzania has made substantial strides, moving 4 places to rank at number 4 this year, after reaping the benefits of serious investment in infrastructure, with the need to address broader infrastructural issues remaining a hot topic for businesses canvassed for the barometer.
The likes of Tanzania has increased its road network by 1/3 in the last 3 years, which is great to see. You're seeing lots of rail projects happening. Rail is a critical component of taking some of that volume off the road. And then I think most importantly, the respondents to barometer is telling us that power remains the most critical element of infrastructure that's currently hampering trade. It's both rated as poor as well as a significant obstacle to trade. And a lot of that is driven from, of course, our experiences in South Africa. It's well documented, but also at times, I think less documented in South Africa really is the challenges that our friends in Nigeria have experienced. They're only meeting 25% of their energy demand currently in Nigeria, which is obviously having a significant impact there.
Other issues that trading businesses raised as key issues included the need for countries to improve the efficiency of their customs processes, which can cause significant delays in business transactions. Standard Bank noted that small businesses indicated that they had increased their cross-border trade activity within the continent, with an appetite to do even more. If sustained, this would augur well for the vision of the African Continental Free Trade Area to grow. Nompumelelo, Siziba, SABC News, Johannesburg.